Hello folks, I'm L.A. Little, and this is your weekly TA wrap, where we take a look at these markets from a neoclassical perspective and ask ourselves what happened last week, and what does it tell us about the coming one. I do the show once a week every Sunday night live at 9 o'clock Eastern Time here, from the base of what is a changing Rocky Mountains. We've got September always brings a change in the season here in the mountains. You can feel it in the air. It's amazing how it just rolls in on Labor Day, but that's what's happening again. And what's happening in this market is we've got some resiliency. We've got a market that simply doesn't want to go down. It's been showing that for quite a while. We saw more pressure to some extent on Friday, in particular on the Russell, down 1.5%. 10.1089 was the close on the Russell, down 16. Remember, 10,001 back to about 998 is the area for the retrace, the retest, regenerate. The S&P is doing it on the weekly right now. It was down 5. They were all down more, not so much more. They were all banging around on Friday, trying to get higher, and then they sold them off into the close, and then right at the close and after the close, they jammed them back up. We had the composite and the NDX down the most in terms of the techs versus the NDX, the SPX and the industrials, and that's because the others have just sold off so far. And so you're seeing a little bit of outperformance there. Over in commodities, we had gold down, we had pretty much commodities were down. UUP was up a little bit. The real story, though, is uncertainty and what that is going to do in terms of the market. And what I'm talking about is geopolitical. But it's also more than just geopolitical, and that is that we have a lot of data that's going to be spent, and we're going to see in these markets over the next couple days, and what that means, and not so much couple days, but actually this week. And what that means is we're going to see more evidence of whether the economy is heating up, and I'm talking about the economies around the world, not just the U.S., or whether they're just barely getting along. Now, the data we've seen so far has been barely getting along. Retail sales in Germany were pretty bad, actually negative. The numbers came out here were not that good in terms of the Chicago PMI and so forth. What we did see was Japan kind of mediocre. I don't expect that the Bank of Japan is going to back off. They have to keep going. And so I suspect we're going to see something out of them as a result of that. But what we really did see on the good side was China. China is showing some resiliency in terms of their economy. The flash PMIs are starting to come out. China had one yesterday, and that showed growth. If we look at the market just from a technical perspective, and we leave the rest of the geopolitical and everything on the background, as you know, I'm assuming you know, futures are up a good clip tonight. A lot of it has to do with a clearing, at least for the next week or so, the geopolitical situation in Syria with respect to America striking them as a result of the supposed chemical weapons use by that regime. That Obama coming out and saying, I'm going to get Congress to try to approve this before I do anything, or get them to approve it before I do anything, has essentially said, okay, we're going to wait another 9-10 days before we do anything, at best, if we do anything. And that has lifted the markets this evening. They're up about, anywhere from 0.5 to 0.75% on the indexes. So now, going back to the technicals from Friday, S&P still ABCD down, bearish. It has tried 3 days in a row to get back over the B point, has been unable to do so. Since this is the weekly wrap, we take a look at the weeks as well. And on the weekly, the retest or regenerate into the swing point high is in effect. And we're slightly under it on a lot less volume, volume over on the prior swing point high was 169.9. We're going into it with 115. We did close under it just barely. I wouldn't be surprised just looking at the chart to get some sort of a bounce out of this. And of course, as we look at what's happening tonight, assuming that holds up, because we're off tomorrow, assuming that holds up until we start trading, the S&P of course would get the bounce. But a lot can happen between now and then. We'll have to see how it plays out. The Dow Jones has been the weakest. The Dow Jones also has an ABCD down, but none of these can break lower. They're all hanging there. In this case, it's hanging at anchored support. If you look at it on the weekly, it's doing the same thing. All right, so the Dow Jones, the weakest two, really teetering, but still won't break down. Now, if we move over to the strong, in this case, I'm pulling up the the NASDAQ composite. That composite, the swing point high on the weekly, 35.32, that's where it wants to try to get back to. But you can see as it drifts back in, there is no volume, folks. Nobody's willing to sell. And if nobody's willing to sell, then they're probably going to buy at some point. The low here, the low of the high bar, and actually I think we actually tested that bar if I remember right. Let me see here. So number-wise, that was 35.98.65, 35, yeah. So we went over it, back under it, less volume. That was the, test failure, if you will, at the high. The low of that bar is 35.92.80. We closed at 35.89.87. So just like on the SPX, kind of a key area that you're testing against, hasn't held. You're trying to come back. The real bar I would watch on the way up was the breakout bar. Top of that guy's 35.79. We're trading at a low of 35.73. We went into it with 57.6. There was 64.6 over there. There's no volume over there on the breakout, but there's absolutely no volume coming back. On a weekly basis, that's telling you this thing wants to try to flip around and go back up again. If you look at it over here on the daily, it also can't break down. It's telling you kind of the same thing. On the NDX, on the daily, you have the same scenario. It won't break down, still hanging up there. And if you go over and look at the weekly, and this is the NDX now, the NDX is coming back into the breakout bar as well. 30, 60, 67. We got into 30, 53. Volume 43.8 going into 64.6. You have no volume. As you come back, that thing also is going to flip around and hang up here longer. And that is the setup on the stronger indexes. If we go over to the Russell, on the Russell we had the biggest move down in terms of percentages. It got underneath the B point finally, just barely. So like on the SPX, you kind of have a negative retest regen in that you're slightly under it. But folks, you got to realize these numbers aren't exactly precise. You can't just bell. That's why you have zones, right? Because the numbers are not that precise. So you get into something, you start to fail, then you got to get follow through on it. And right now, that's up in the air, and we'll see if it's going to happen or not. And that would be tomorrow when we see it. So the Russell trying to do the ABCD down, wants to break, so far hasn't been able to. And we can't really look at the volumes back here because they weren't printing them back then when I was collecting data. So we'll look at the recent ones though, and the reason I'm using this is I like the indexes themselves better than the ETFs. The breakout bar here, the low is 1,007.17. You did 1.3 there. You're coming back into it with 1.09. So slightly less volume. Actually a decent amount of volume less. We got to 109, so you didn't quite get into it. And the swing point high has 1.7 on it, and that high is at 108.23 on the Russell. So you're almost into, on the weekly, the support on the weekly swing point high. On the daily swing point high, it's a little farther back at 101. What you can see here is you can see that this thing, as it comes back, also trying to find support. I wouldn't be surprised to see this one try to flip around as well, as it's gotten as close as it's probably going to get. So it's starting to look to me like these indexes don't want to give it up, do not want to do the ABCDs down. That's four. Is it four bars now or three on the SPX? I think it's four. Well, it's actually three. The fourth was the break. So you break doing the ABCD down, and you don't want to break afterwards. So if anything, maybe they finish it off, but right now it's looking like they're probably not going to. Let's go over and see if the sectors tell us anything different. I was looking overseas. Overseas doesn't look that different in terms of their indexes. Look a lot like ours in most cases. The only one that really stood out was Taipei. That market's really rallying, pushing higher. Let's see what's happening here, because here you had, remember, we had extensions on 4 sectors finishing off ABCDs and then trying to bounce and potentially setting up new ABCDs to the bearish side. So let's look for that and see how it looks. So now this is an ABCD down on the IYT into support, and the big bar is, the low is 11115. You got to 11143. So another push down into that would be the bottom support, and that's where it should hold if it's going to. So you got a few more points to the downside. The ABCD actually extends quite a bit farther if it's going to do it, though. You have a larger one on a weekly. Let's pull over and look at the weekly actually. You have a larger one on the weekly. Top here is 119. It's about 7, and 7 onto that gets you to about 109. Okay, so 109 there, 109 over here. Really just gets to the bottom of this, doesn't it? Yeah. Gets down into this lower area. So I don't know. I don't know if that one's going to extend. That one actually looks bearish. Let's look at the SOX and see what the SOX is showing us. Alright, so the chips. The chips, remember, they did an ABCD down, then they went back, and we had 3 sectors that did that. They went right back into to invalidate the immediate ABCD down. Now the SOX held, but just barely, it looks like. 62.45, closed at 62. No, it closed underneath it. So, you know, the ABCD, if you will, is back in effect again. Let's see what the weekly on this guy looks like. 60.93. Boy, there is no volume coming back on this one. See, this is the thing that would bother me if I were trying to trade this short, is that in most everything you're looking at, there's absolutely no volume. And, you know, that's normal this time of the year. But we're talking about volume that is so small, you can't hardly make a decent read. You hear me like on the UNL or some of the others I talk about, or even on the SOX I talk about, it's hard to make a read because you don't get enough volume on a consistent basis, right? When you get volume consistently of size, then you can start making some decent reads. But some of these have had so small a volume you can't tell. XLB actually looks like this one's going to hold. Did an inside day, more volume. That one actually looks like it's going to try to flip around, and the weekly doesn't look bad either. XLE, energy sector. Remember, it did the first one to do the ABCD up, and then of course came right back down the next day. Doesn't have the volume as it comes back. These are just sloppy. These are all just very sloppy, and I guess that in a way that reflects this market right now, because you get sloppy charts when there's a lot of uncertainty, and we certainly have a lot of uncertainty because nobody knows what's going to happen geopolitically, and everybody's waiting on the economic data. Now the XLF still looks pretty bearish. You got an ABCD down, it finished it off, tried to bounce, couldn't bounce, left long tails, holding right at support, but just barely. And the weekly on the XLF. Okay, so the high of the low is 1960. And we're at 1944, so we're pretty deep into it. Anchor support off this big bar is at 1922. 1922, if I go back and look at the next ABCD down, if it forms, 2014, that's 50 cents. That would get you to 1914, which is right into that big bar on the weekly, which was 1922. That looks to carry lower. So far I see some messy ones that don't tell me anything. Two of them telling me bearishness. Let's just go through the rest of these and see if we see anything else useful. XLI. Okay, so this one's doing the ABCD down again. Really has no volume. So just like the XLF, this finished off an ABCD, got a little bit of bounce, and now it's trying to set up a new one. And most of these can't even get back to do the retest regens. Just barely getting into them. Actually, when I think about it and look at it, that's a failure to get back into this. Right? This is the bar it's trying to retest regen on. July 12th. Volume over there, 11.3. You're going into it, you got nothing comparatively. Let me go back to the XLF. Does that have a retest regen on a swing point low it broke? It's much higher though. It doesn't have one. XLI looks like it wants to carry lower. So 3 sectors now. The other 2 don't tell us anything. Here's another one finished off an ABCD and is now trying to bounce and can't. Okay, so the swing point low that was broken here was this one. And it's already doing the retest regen and is regenerating lower. That also looks bearish. Let's see what the weekly looks like. Alright, so the breakout bar, the low was 31.46. We closed at 31.40, so we're under it with no volume. And the retest regen low is 31.44, also much more volume. This is like SPX and the others in that it needs to either follow through and break away, or it's probably going to flip around and bounce. XLP, a little dead cat bounce off the lows. That's really nothing there. So no volume as it's coming back. XLU still wanting to try to break down. Healthcare. And I actually had a question about this, so I'll answer it while I'm here. Well, actually, it wasn't about the XLV, the healthcare. It was about Amgen, so I'll take it in a second. Okay, so this one also did an ABCD down and couldn't go down and still hanging, like so much of the market. Remember, it was also doing a retest regen into this big bar. That's going to make it very hard to go down, which is exactly what's happening. And then on the weekly, it's also doing a retest regenerate off of this high that was broken. And the bottom of that's 48.72. We got down to 48.82. I would think we're going to see some more testing there, and it's probably going to hold. XLY. Another ABCD down. That was, I don't know if that one finished one off or not. Can't follow through. The retest regens are much higher. Let's see, on the weekly, it's coming in to do the retest on this swing point highs, 58.09. You know, I've seen this on several charts now, and actually it's, you know, I hadn't really realized it, but many of these charts are showing us the same thing, and that is that we can't break down here because we're getting retest regens into higher volume swing point highs. That's what's going on, right? You see it here very cleanly on the XLY. You get a breakout, right? And that breakout has volume on it. The bar that was broken had volume on it compared to what you're coming back with. Folks, there's no sellers. Nobody can sell, nobody will sell into this. That's why we're not breaking down, right? There's no sellers at these levels. And why would you want to sell at these levels when you really probably should be buying at these levels, right? In terms of a chart, this is where the money is. This is the supply and demand equation. The demand is at this price point and the supply is drying up. That's why it's not falling. And we've seen it over and over in multiple charts, and it's just, the clarity is just hitting me that it's the weeklies that are holding this thing up. And probably going to continue to hold this thing up until we get some sort of a bounce. And then, if we come back again, then you have a better chance to break them down. So I think these things are going to bounce. And part of that is, of course, looking at the futures and seeing that we got some clarity on the geopolitical, at least for a short period of time. And it also fits in, if that's what happens, right, if that carries for the next day and a half and we open up and we get a rally, for 2 or 3 days, well, what are you going to do? You're going to go back up here, potentially fell, and there's a good chance of that. And if you do that, then you come right back at these areas and you have a full head of steam and you can try to break them down. So that kind of actually makes sense when you think about it that way. Let's look at the Ox markets real quick, and then I got to try to take a couple questions before I run out of time. Let's start with the bonds, because the bonds were testing up into a retest, regenerate lower resistance zone, right? The bar they're playing with is this bar. That's the August 1st bar, highs 106.49. We got over it, 106.68, got over it. Back underneath it, you did 8.9 into 12.8. That ain't enough to break it down. You're going to come back. You're going to start building out a range down here, and then you're going to try to come back up again, because I do think this thing is finally starting to put in the bottom, as I've explained before. If we look on the weekly you got just loads and loads of work to do on the way back up. Resistance is higher, which is one of the reasons I think we'll pull back and then come back again. But the bonds still look like they want to trade lower. The dollar. Now the dollar was pushing, or trying to push up all week, leaving tails up there, but it did get over the swing point high, didn't have the volume. It's a suspect break. I wouldn't be surprised to see the dollar try to work lower. Let's look at it on the weekly. There's no volume. It's coming back up. It's going to hit resistance not too much farther. So that price point up there is 22.36. And the bottom of it is 22.32. Remember, that's where we played. That's about the halfway area of this big range. I would think that's where we see some pressure come back in on the dollar. And if we look at the FXE, that would mean it's going to need to pull back a little bit more. And it's holding that support barely. And it is there, though. The FXC might not let the dollar push up immediately. We may see a bounce first, as given the way this one looks, because this was a test of the swing point low and it held. That looks like it's actually going to hold. So if the FXC, because it's 50% of the weighting, if it holds, the dollar is not going to rally. It just can't. If the FXC tries to move higher, FXY is still just nothing. And I suspect if Uncle Abe has his way, it's going down again. Let's quickly look at oil, because oil made new highs. Remember, it had those three spikes up, a lot of volume, 2 spikes up, a lot of volume, came off, filling the gap. This thing's going to come fill the gap, and then we'll probably see it try to test some more. And this was one of those odd cases. Most times when you get a break of multiple swing points, even on the same time frame, you can see here on the weekly, it failed to stay over that high. Multiple swing points here broken. Usually that gives you the juice, and it did. A lot of juice there. You can see there was a lot of stops. I talked about it at the time, saying there was probably a lot of people blown out of their positions. I wouldn't be surprised to see it come back, and that's what it's doing. Let's see, gold and silver. Gold is coming back in some, and I would not be surprised to see this come in farther. You did a little doji on Friday. It may try to flip around. The breakout bar here, the last one, the bottom of that's 132.50. I wouldn't expect it to get past that on the first try back down. Then also 130.50 130.51 is another number I'd watch on the way back. So let's see, 130.51 would get us much deeper. Not that much, but farther back to these swing point highs. Now note here, you did a breakout over swing point highs with no retest. That begs to be retested in a weak market, which gold has been on the longer term time frame. So 130.14, gold could make it all the way back there. Probably gets a bounce, right, and then potentially comes back in there. Let's see, silver was the one that was really leading. Let's look at it real quick, and then I got to take your questions. So let's see, silver, yeah, same story, and silver's coming back faster. So I had a question about Amgen. Let me flip over. Let's see what Amgen looks like. And the question is would it make sense to try to buy this baby? And the price point off the 815 swing point high was the question. The 815 swing point high, I believe, is this one. Yes, it is. And that was 108.52. It's into that bar. And you know, my take is that Amgen is building out to go higher, but it's going to take a while, just like the rest of the market. So let's see if it would have hit the high with though. Yeah, so this is a failure at the highs though, folks. 114.95, right? You go over the high, 114.95, you get to 116.25, and the volume, these volumes don't look right on the weekly. 4.1, yeah, that just doesn't look right. Something's wrong with those weekly volumes. It's not that light, but it's certainly not as heavy as this one. So it was a failure at the highs, and is a failure even at this high. So Amgen, to me, you can buy it on retraces, but you may get a deeper retrace, and you may actually close this gap. So be a little careful with it. If you want it, look at your support zones. Anchored support is where you want to try to buy this baby as it comes back in. And then I have a question over here, thinking about the winter trade. Tommy says, seeing a lot of articles about the playbook that favors technology because of a low sector PE and how it's been out of favor for years. Well, I don't know if it's been out of favor. It's been outrunning everything else for the last couple of years. So, you know, I'm not sure if I agree with that. But usually what you see is you see small caps outrun everything on the winter trade. And I've written articles about that. If you want to come over to the site and take a look at that, I could, you know, you can just pop in here and, you know, do a search, and we could do a search. But I think it's like, I don't know, maybe IWM outperformance or something, outperformance. But there was an article I've written a couple times about this. Yeah, right here. So anyway, this small cap strategy, I hit the wrong one. This is the article. So if you want to come back in and look at this, there's a bunch of data about how the small caps outperform. So that would be the place. Now the small caps this year have already outperformed. So what you need the small caps to come in enough to make sense. But that is where the trade usually is for the winter trade. It's in the small caps. The small cap strategy is what I called it. So pop in there and check that out. Read that article, and I think that would give you some ideas. All right, folks, tomorrow, programming note, we're, of course, off. The day is off. The markets are closed. We won't be doing any shows tomorrow, and we'll pick it back up on Tuesday. You folks have yourself a great night. Have a great holiday tomorrow, and I will find you here on Tuesday night. Take care of yourself. Till then, I'm L.A. Little, and this is and was your weekly TA Wrap. Have a great night, folks. Take care.